Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Triple Q report for Thursday, February 17th, 2022. Before we look at the charts, as usual, I just want to encourage you to please click like each and every time you do watch the daily Triple Q report. It does help us out a great deal in being found on YouTube when people search for the relevant content. In this case, a Triple Q analysis, Nasdaq-100. And subscribing to the Wicked Stocks YouTube channel will provide you notification when new content has been uploaded to the Wicked Stocks YouTube channel. And that is to your advantage to see it early when it's relevant and usable. So let's take a look at the charts. Once again, I'm going to start with the big picture and work my way in. The big picture still, a month ago yesterday, we settled below that 378.33 long-term channel bottom. Now resistance, longer-term resistance. It's really mid-term resistance, if truth be told, in that it can contain monthly activity. Long-term support on this very same chart is 329.58, in that it can contain at least quarterly, if not annual, selling pressure. So mid-term resistance 378.33. We are kind of smack dab in the middle of that, probably a little bit closer to 378.33 than we are to 329.58. We've had some meaningful rotations since the sell signal about a month ago, and we're right in the middle of where we were probably 3 days following the initial sell signal. And so, I still anticipate 329.58. I still think it's likely. The question, of course, is are we going to test 378.33 first and then back off into March and continue into April back to 329.58? Or are we going to continue south over the next couple of weeks to 329.58? And in my opinion, here's the answer. It's the low 360s. Holding below the 360.36 to 61.48 area will keep a lid on this market through the balance of February trade. And from there, we can quite easily back off. In fact, holding below 360.36, I maintain a 329 handle, that long-term channel bottom at 329.58. I maintain a 1 to 2 week downside objective holding below 360.36. Let's jump into the support and resistance. And I'm going to show you here, of course, you've got the green horizontal line that represents roughly where we close on Wednesday. The numbers haven't changed a great deal. I still have 357 even above the market. We pushed through that just a bit late in the day on Wednesday and backed off below it to settle below it. And then 350.13, that was a slightly different variation. I forget exactly what that number was, but I know we missed it. I think 350.71 was the low. So we traded inside that zone. We could once again trade inside that zone. But I do want to mention, and I didn't prepare any charts. I probably will put those out in Friday's Daily Triple Q. But that crude oil has been on a pretty wild ride, and it's still testing long-term resistance, 92.98. We actually got up to 95 even on Wednesday. And so, the markets were down when crude oil was up, and then crude oil backed off, and the markets rallied late in the close. Right now, there is this sort of inverse correlation with crude oil. And as long as crude oil is testing this long-term price ceiling at 92.98 and not closing above it by a 1% margin at the end of this week, crude oil can back off in a meaningful way from here into spring trade, in which case I would expect the stock market to find support. And in fact, this is just kind of a simple way of saying probably rally. As crude oil falls off, the Triple Q should find strength. And inversely, so tomorrow, Friday, if March West Texas Intermediate settles at 93.91 or higher, which is a 1% violation of a very long-term line study on the weekly chart this week at 92.98. So if we close at 93.91, I'm expecting $115 a barrel over the next few months. And that should add weight to the market. So we're still at this sort of pivot point in crude oil, a significant one. We're not at a significant pivot point right now in the stock market in general. So let me jump out of this subject and leave it as I have, and we'll just talk about the fact that if we push or open today above 357 even, we should actually reach that 360.36 level, which is a short-term descending channel top, and it's backed up by a kind of a near to midterm descending channel top at 361.48. This area can contain weekly buying pressures, and once tested, we can fall back to that 334.15 low from January within a couple of weeks. In fact, holding below, as I say, 360.13, that 334.15 level is likely over the next week or two, and that is backed up by the long-term support at 329.58 that I showed in the opening slide. But if we do close today above 361.48, then we have, I think, probably a good low through the rest of February, because it'll take every bit of a week to reach to the next target, which is in the upper 370s. 377.24 is really the start of a range of meaningful resistance up to 378.33. 378.33 is once again that long-term channel bottom. In fact, this is a better image of that convergence of those two channel structures. This area, upper 370s, if tested over the next week or two, can contain buying through March trade. And from there, we can fall off again. And that 329.58 long-term support would still be calling the market, so to speak, and it would be in reach within 3 to 5 weeks, perhaps, of testing the upper 370s. Or we could get caught into a consolidative framework, and it could take the better part of 2 months, perhaps. But I think I'm kind of outlining the basic parameters here as we continue to look through March trade. Now, if we did settle above 378.33, I think we have a good low, not only for the first quarter, but probably through the second quarter. And I would anticipate a retest of that 408 area high from November within probably 3 to 5 weeks, and honestly into the mid 420s to low 430s within a couple of months of closing above 378.33. Let's take a look at the downside and the support and resistance. If we break or open below 350.13, 343.89 is in reach today. That is nothing more than the move low on Monday. We could double bottom there for the day only, and if we close below 343.89, then tomorrow, perhaps within 2 to 3 days anyway, a test of that 334.15 low from January, which is the start of a range down to 329.58. And you can see that here represented as a horizontal line, but it's actually that long-term channel bottom. So that area is in reach. Well, it all depends on what the time frame is. If we close today below 343.89, we're likely to reach that long-term channel bottom within 2 to 3 days, 3 to 5 days. And I'll just kind of finish with a reminder that holding below the low 360s will keep that lower support area in reach over the next couple of weeks. I think that pretty much rounds it out for today's Daily Triple Q report. Please click like. We've got a 45-second reminder at the end of this video showing how we're transitioning in March into a paid format. Please click like, if you will, and subscribe to the Wicked Stocks YouTube channel. I appreciate it. I'll be back tomorrow for Friday's Daily Triple Q report. The daily video you just watched will require a paid subscription to wickedstocks.com beginning Tuesday, March 1st. Become a wickedstocks.com premium member to continue receiving our daily SPY report, our daily Triple Q report, our weekly DIA, IWM, and Bitcoin reports. Monthly subscriptions start at $25 a month. If you're not ready to become a premium member, I encourage you to become a basic member for free, which will alert you once these analysis videos become part of our paid subscription plan on March 1st. We will continue to offer free and valuable content on YouTube, though it will not include the series of videos mentioned earlier. We hope you become a wickedstocks.com premium member. We offer a 7-day free trial, and cancellation is allowed at any time.